Hey guys, what's up? Stock Retail coming back to you. Finally going to do the Q2 earnings preview. It's Thursday mid-afternoon here on the West Coast. Greetings to you wherever you are and whenever you're seeing this. Wanted to get this in everybody's hands a few days before the earnings call, in part just so no one can say I cheated after the fact, if I happen to get anything right. Obviously a little risky, may get some things wrong, but that's okay. I always tell you guys a forecast may be wrong. That's no problem. And then also I wanted to get this in everybody's hands just so people can be thinking about just what's the setup. I know for myself, I'm locked and loaded. I've been holding for a very long time. But I, just want to get this in everybody's hands because there's a lot of FUD out there, a lot of misinformation. So here is my view on earnings. It is a forecast. That means there's a lot of risk to this. And in fact, when I forecast the box office, that I'm able to get pretty darn accurate. I don't think there's been a quarter where I've been off by more than like 4%. So we're talking 96% plus accuracy every quarter on that so far. But it's a lot harder to accurately forecast earnings. Now, if you followed me a bit, you might have seen last quarter I nailed it. Like we're talking 99.9% accuracy or something. But I'm going to tell you right now that was dumb luck. There's no way I'm getting it 99.9% accurate again. There were some items I overforecast, some items I underforecast. They all kind of washed out in Q1, and so I landed on almost the exact right number. I doubt that's going to happen again. So what I'm going to share with you here is just going to be shared with some humility, and just you guys need to take this with a grain of salt, that this is one person's point of view. Yes, I have a background in forecasting, but it's easy to be wrong when you can't see the numbers that the insiders see. I don't see the books. I wish I did. So let's go through what we're going to cover today. I'm just going to kind of hit some headlines. We'll talk through the box office kind of year over year and quarter over quarter. That leads into why my forecast is what it is. So we'll do that double click. I'm going to talk through risks so you can understand where might the forecast actually be better than what I'm saying. So that's upside risk. And then where might it be worse than what I'm saying. So I'll kind of go full transparency with you and tell you where I think I could end up being wrong to the downside or the upside. I'll give a little bit of an update on cash. Cash flows has just been a heavy topic for a very long time. We used to get a lot of FUD on that. That's partly why. And then also just cash flow matters. So we're going to cover that. And then I'll kind of, in the end, give kind of a final summary and some final thoughts. I will, pretty early in the video, kind of hit just the bottom line. But I encourage you to stick around to kind of understand why that's the number, and so you yourself can start to understand what you believe about earnings and where you think I'm either right or wrong. All right, so what are the headlines? First of all, I've said this for a very long time, so I don't think it's a surprise. I believe you will see positive earnings and positive cash flow. That actually means the bottom line, I believe, is going to be a positive number. I feel a little vulnerable and a little nervous saying that so, I don't know, transparently with you guys, because being this confident is, ironically, it's making me second guess myself. I'm just sitting here going, okay, what am I missing? What am I wrong about? I'm going to show some of the details to you guys. I've told you before, I've got, 3-4 years worth of every single line item in the P&L. So I'm looking at all the expenses, and I'll look at things like, okay, did I follow the trend on like admissions expenses, the amount that they pay back to studio? Did I follow the trend on something called depreciation, or let's say operating expenses? So I look at every line item and I'm asking myself, did I kind of get out of whack on anything? Should I have adjusted anything? So coming into sharing the number with you guys, I do actually feel pretty confident, but in a weird way, it's that confidence that's making me wonder, okay, where am I off? Because there's a lot of people in the industry who are not forecasting positive earnings, but I am. So I guess we're going to find out. I will tell you why I got to that number, so we'll hit that soon. All right, so the box office, the next headline, high double-digit growth, both year over year and a quarter over quarter view. Awesome that movies have just been growing like crazy. I'm going to show you some of that. But you kind of remember, like we had Mario, we had Guardians, we had Little Mermaid, we had Fast X, we had Spider-Verse. We had a lot of really big movies. But also, just as a tease, I'm going to tell you whether it was the big movies that drove the growth or not. That's been kind of a hot topic too. Third headline, food and beverage spending. You might remember during the quarter, Adam updated us a couple times, and once he kind of said, hey, this last week was our all-time high in food and beverage spending per person. And then one time he kind of said, hey, last weekend or whatever was our all-time high on a weekend for food and beverage spending per person. Now that really matters because I forecast the food and beverage revenue. And I do that based on my forecast of attendance times how much people spend per person. So when that spending per person goes up, and because the box office grew, attendance went up, you start to see some real multipliers on food and beverage revenue. So we're going to talk about that too. Heavy demand for collectibles. I saw you guys just scooping up a lot of those like popcorn tins and some other things like that. So that's driving some other revenue. And then remember in Q2, that's when popcorn showed up at Walmart. And boy, the second it showed up, it was disappearing. We were buying that stuff. So we're going to talk through all of that and how that feeds into the forecast. Before we kind of get to that double click, let's talk about the box office. So first off, do you remember, I made a whole video about this actually. Somewhere in the quarter, there was an analyst, a stock analyst, who kind of said, they tried to sort of throw a wet blanket on box office growth and say, well, the blockbusters are basically sucking all the oxygen out of the room, I think was their language. And I went and did some DD and showed that they were wrong and that the growth was coming from kind of mid and even smaller level movies. So let's ask ourselves, did that actually happen? Well, it did. So I don't know, feather in my hat, I was right. That analyst was wrong. You can see here, look at the first bullet. So the growth is both at the top and in the middle with smaller movies outpacing blockbusters for growth. So look at these two sub bullets. The top 10 movies, if you look at this Q2 versus last Q2, and by the way, at the time, last Q2 was like the biggest post-COVID. So now we've just set a new record for the biggest quarter post-COVID yet. And Q3 has a shot at breaking it. I kind of don't think it will, but Q3 is starting just awesome too because of Barbie and Oppenheimer. But so Q2, year over year, we grew 10%. Nice double-digit growth, $200 million, top 10 versus top 10 of last year. But look at all of the other movies. The other movies grew at a rate of 40%, quadrupling the growth rate in all of the other non-top 10 movies. We got 150 million, so almost half of the growth in dollars and a quadruple growth rate in terms of percent came outside of those top 10 movies. So that tells me we're getting more movies and we're getting them more diverse audience that's returning to theaters. That's really, really healthy for just the movie industry as a whole, so that we're not just getting, and I say just, but not just getting sort of superhero, and kind of big blockbuster movies. I'm personally excited about that because I love those blockbusters, but I also love seeing some variety of story, and so that's really great. So that's kind of an update there. And then the other big kind of headline on the box office is international actually grew faster than domestic. And so it's kind of explainable because last year, Q2, the biggest driver was Maverick. Well, Maverick leaned fairly heavily domestic because, it's about the U.S. military, basically. So while we all loved that movie, I went and saw it 3 times myself, it did lean heavier domestic than international. And so that quarter, part of the reason I'm sharing this with you is I've told you before sometimes on this channel, I use the domestic box office, and then I've got all kinds of formulas that help me get to AMC's global revenue. Well, reminder, AMC has brands all over Europe and in other parts of the world. And so when that international box office grows even faster than the domestic box office, it's really great for AMC. We see even more growth. So this year, if you look here on this bottom bullet, Mario, Guardians, and Fast X, those were 3 of the biggest movies. All 3 were actually way bigger outside of the domestic box office than they were here in the domestic box office. So you're seeing, I'm going to talk to you about the domestic box office growth, but keep in mind that you could sort of even add bigger numbers in terms of the international box office growth, and AMC benefits from that. So let's go into the weeds here. We're going to talk through the details and cover all of this. I'm going to just go line by line for you. So the domestic box office, I just said I would talk about, we hit almost 2.7 billion. You can see that year over year, that was a growth of 15%. But now remember, that means international grew even faster. And quarter over quarter, so remember Q1 is often kind of one of the lightest quarters. So massive growth from Q1 till now. And by the way, the reason I'm telling you some of this is you could go to their earnings. I was doing this and just kind of checking myself, in terms of revenue growth versus earnings growth. You can kind of go and see and kind of compare these and find the numbers from either Q1 or from last year's Q2. So that's why I'm kind of spoon feeding this to you. Maybe I can cover that in another video too. But anyway, high double-digit growth at the box office. Then I take that down into kind of all of AMC's numbers. So I'm going to give you those here. And like I said, last quarter, some of these I was off to the kind of being under, some of these I was off over, and the total added up well. So we'll just have to see. So don't hold me too tight to any of these. All right, so AMC admissions, I've got at 829 million. You can see that's a growth of 27%. And so then there's our first asterisk. So there's a few reasons why am I having AMC's admissions growing faster than the box office. Well, one, I've already talked to you about how the international box office grew faster than that 15%. And remember, AMC benefits from that. So you're already going to be above that 15% almost no matter what. Two, remember that AMC's got some additional properties since this time last year. I believe, oh man, what was I'm kind of forgetting the brand they bought sort of in the mid Northeast. Shucks, I'm forgetting that name. It'll come back to me as soon as I'm done recording, I'm sure. But there's been a few properties they've added since last year, so then naturally they would get a little more attendance year over year and grow faster than the box office. And then third, last year around this time, if you didn't know, there were some competitors running some really heavy traffic promotions, like coupons, discounts, raffles, just all kinds of promotions that kind of, I can see it in the numbers if I look. Let's say I look across a bunch of quarters, I can kind of see AMC's percentage of attendance in terms of market share took a dip for 2 quarters and came right back again. And so I think there were some heavy promotions that were going on. I remember hearing about some of them. So if you're comparing Q2 of this year to Q2 of last year, basically AMC gets some market share back. So all of those three reasons mean that I've got admissions growing faster than the box office. And the key is, can I explain it? Is it logical? Does it make sense? So I feel pretty good about sharing that number with you. That also, of course, depends on what was AMC's attendance. I've got kind of my own forecast for that. And then sort of how much are people paying per ticket when they go to AMC. That's one area I may actually be a little conservative. There's a chance we could beat this number. Let's find out. But there's a lot that goes into that, so I didn't feel comfortable bringing it up any further. All right, so the AMC food and beverage, you can see I've got 715 a person. And just so you know, when he said we had those kind of like highest week, highest weekend, highest month ever, that's way above 715 a person. So I've been actually really conservative here, I think, on food and beverage. Depends on what you think attendance was and how conservative or not I was on that. But I'll tell you right now, the all-time high is quite a bit above 715. So I averaged it out and just said, all right, maybe we had a high week or two, but I'm not going to quite bring it up more for the quarter. My honest opinion is we may very well beat this number in food and beverage. So that might be, we'll kind of talk about that upside risk in a minute. But year over year, that's a growth of 32%. So that's both kind of the admissions, sort of the attendance growth I just talked about, in combination with the fact that basically we're buying more food and beverage than the last year, or at least we're spending more per person. And then you can see kind of quarter over quarter. On that one, we're really keeping pace. And that's just because recent trends help me kind of keep in line with what just happened. All right, so the other revenue, I've actually got that, you can see, fairly conservative. That's really basically just growing in line with the box office. And that just has to do with, I've seen over time, there's kind of a trend that sort of mirrors box office growth, and so I've just kind of got some formulas that keep that in line. But if we happen to buy a lot more of those popcorn tins, or some of those maybe were a little more expensive, then you're going to see us beat this number. Like I know with Spider-Verse, for example, there were actually 2 popcorn tins. You had, the Miles and Gwen kind of matching set. So if people bought both of those, or if AMC sold a lot or whatever, this number could also be conservative. All told, that gets us to 1.44. Sorry, that's our expenses line. I'll come back to the total revenue in a minute. I've got something I'll share with you later. All right, so on the expenses, you can see I had 1.44. So, it's not all about just as AMC bringing in more revenue. It also costs money to run the business, right? So I've got a line, for example, for the operating expense. The more attendance we've got, the more people have to sweep up our mess, open the doors, scan our tickets, sell us concessions, all of that. Over time, I've been pretty accurate with that operating expense line. We've also got things like, well, there's a cost to the food and beverage. It's not all free for AMC. So I use kind of the recent trend on that. You can get all of this from the earnings reports. It's all in there. And so I've got facts that I can base that on. And then there's things, like I said, as a percent of the ticket sales, AMC has to pay some back to the studios. So I've got kind of the recent trend on that as well. So all of that adds up. I've got 1.44 billion in expenses. By the way, I've actually got an assumption for income taxes this time around too, because I believe AMC made money. I believe they'll be paying income tax. That's an expense, so you got to include that. So you can just hear the level of detail I hope that I've included in there. Year over year, you can see I'm actually underpacing the domestic box office, and that just has to do with some growth in expenses. It's a high inflationary environment. You're having to pay your employees, all of that. And then same thing quarter over quarter, earnings growing slower than revenue. I've actually got a feeling that the team will beat that, I hope. But just want you to see, I hope I've been a little bit conservative. But look at the bottom line. So as a bottom line, I've got us at almost $50 million of bottom line earnings. That's even after stuff like amortization and depreciation that are kind of non-cash items. We'll go through all the asterisks in just a minute. You can see last year for the same quarter, we lost 122 million. Actually, why don't we cover that asterisk? So that's the second bullet at the bottom. Shoot, something got cut off here, guys. But I don't want to go re-record all this. I do these in one take. I'd have to start all over. So I'll just see if I can remember some of these things and cover it for you. So I know we already talked about food and beverage outpacing, so that's fine. We talked about that. So last year, second quarter, that you can see the third bullet down here. That's when the Highcroft investment showed up. So even though it shows a $122 million loss, if you were trying to compare and say, all right, well, how much did the box office grow? So how much might earnings grow? It's not an apples to apples comparison. There's kind of an apples to oranges here, because you'd have to take $57 million out. You can see this note at the bottom. Take $57 million out of there, because that expense, you're not going to have another investment in Highcroft this quarter. So all things being equal, this loss was not as big as what it looks like. They booked an expense. You can see it in the earnings report if you wanted to go. Sometime I'll do a video where I walk through how to read all these documents. I think that'd be really helpful for apes too. But you could see, it's actually in their earnings report, that there was 57 million, almost half of this entire loss last year was just the investment in Highcroft. So if you took that out, that's really positive news, guys. And I knew that at the time, like, hey, actually our earnings were much better than what it kind of looks like. Because there's this one-time expense that has nothing to do with, how expensive it is to run the operations. So you take that out, and actually operations was that much closer to having positive earnings last year. Take almost half of that loss away. And then I guess I do have it. It didn't get cut off. I just kind of made a mistake here where I'm showing these 4 asterisks, but it's right here in the third bullet. Last quarter, there was a one-time other expense of 39 million. So basically, I assume that's kind of not going to happen. Also, last quarter, there was about, I think, $100 million, if I recall. I probably shouldn't go off memory. I should go look that up. But there was a large amount of early paying of debt. They paid down debt early, which was awesome, saved us money in the long run, but it made these earnings look a lot worse. So if you were to look at this and go, geez, how do we get from a $236 million loss to a $50 million gain? Well, there's kind of a walk you have to do. If you've ever worked in finance, you do these walks, and you got to take out this 39 million, one-time expense, and then take out the early debt payments. I'm going to talk more about those. All right, let's pull up a second, because that was a bum load of numbers I just threw at you. Let's just kind of highlight double-digit growth at the box office, massive growth versus last quarter. We know that we've got kind of all-time high spending on food and beverage, and I didn't necessarily reflect all-time high in here. And we know that, of course, AMC's expenses are going to grow, but also I've got kind of a view of that at a detailed level that tells me I believe we've got positive earnings this quarter. Let's talk about some sort of upside and downside risks, so you can kind of ask yourself, where do I think he might be wrong, and how do you feel about the earnings? So I've talked a lot about those one-time expenses. So if in the earnings call, Adam says, hey, we had more early debt pay down, or actually, sorry, that's this fourth row. I forgot I kind of broke those out. Sorry, guys, I got all kinds of COVID brain going on. I'm not as sharp as usual. Just bear with me. So one-time expenses, let's say in the past, for example, if he says, hey, we bought this new property, or there's some deferred rents we've paid, there can be all kinds of reasons there's a one-time expense. I can't predict those. Unless he comes out with a press release ahead of time and tells us what he spent, I have no line of sight to those. So I don't forecast those. And in particular, that's the point of why they're called a one-time expense. It's not some ongoing every quarter thing. And so I will just be able to do a walk to reconcile my number to the final number if we see some one-time expenses. Okay, so I'm just saying that's downside risk to my number. I have talked a lot about so far in this video that maybe there was higher food and beverage spending per person. I think actually that might be likely. So if you think about my $7.15 a person, and if you think about, I guess I haven't really told you some of the assumptions I made on attendance, but I really just used the overall trend from like the entire last year. I look at all the last 4 quarters and kind of figure out, based on the box office, what AMC's global attendance might be. So if you think that maybe attendance could have picked up more than what I might have, or if you think people spent a little more per person, then that's upside risk, which is obviously a good thing. Could potentially bring the food and beverage revenue higher. On the rent side, I actually increased rents in my expenses. So if you go back to this bottom line expense number and how I showed that we're not growing earnings as fast as the box office, one of the reasons there is I knew they were working on opening the Boston ArcLight. At one point, there was an announcement they were going to do that in the spring. I don't think it actually opened last quarter, but I just went ahead and assumed that and maybe a few other properties around the world. They could have started paying rent on them, even if they hadn't fully opened them for attendance yet. I just figured those are sort of in the brand, in the fold, and now they're paying rent on those properties. So I actually brought rents up this quarter, which would be the first quarter in a long time that rents would have gone up. So just so you know, if rents didn't go up as much as I forecast, then that's less expense, which would be a nice upside risk for us. We would see, better earnings. Okay, the early debt reduction that I started leading off with a minute ago, almost every quarter for the last few quarters, or for the last year or two, Adam has announced that they've paid off some debt, and it's been coming at massive discounts. If you've seen some of my other videos, you've seen I've talked about often those are anywhere from like a 40 to a 50% discount. So say he pays off $100 million of debt, but only spends $50 million to do it. It's an instant return on the balance sheet. We'll talk about how that works someday. It's really great. And then it also allows me every quarter to kind of take whatever the interest rate was on that debt and sort of take out future debt payments. And so every quarter we're also seeing the actual sort of quarterly debt financing payments going down. So if they paid off more debt, that's going to be an expense. There'll be cash that went out the door to pay that debt off. And so we'll have to account for that, and I have not had any forecast for that. All right, popcorn investment. We still don't fully know the popcorn business model and what that looks like. I'm going to give you my numbers on popcorn here in a minute so you can see that detail. And again, make your own assumptions on whether you want to be above or below my number. But without getting too detailed here in terms of accounting and all of that, there's a lot that goes into ramping up a new business. There's even machinery. You remember the tweet he had a long time ago that literally showed us the machines cranking out the microwave bags of popcorn? There's an investment there. And so I don't know the accounting treatment of if there's going to be a lot of upfront expenses that are recognized as that business ramps up, or if there's something called amortization of the tooling. So now we're getting real detailed. But do you basically attribute the cost of all the manufacturing kind of like per bag as they ship over a period of years, or do you have this big expense up front and you front load it? I have no idea how they're doing the accounting treatment on this. So I'm just telling you there's a chance that the cost of ramping up the popcorn business could be hitting earlier than we expect, and I don't have any big forecast on that. I do have a cost for popcorn because I have some margin assumptions, and I'll show you that in a minute. But what I'm talking about here is more an investment cost up front of ramping up the manufacturing. And even if there's any incentive deals they did with Walmart or something like that. So that'd be downside risk. But on the other hand, I think I was fairly conservative with the actual sales of popcorn. So just think about how many bags did they sell. That would be upside risk. There'd be more revenue that maybe I missed. On income taxes, I made just a wild guess, guys. I think I had maybe $4 million of income taxes. That could be way higher. I'm just going to call that downside risk. We're going to find out what the actual income taxes were. We're not used to positive earnings with AMC, so I don't have a lot of trend to go on what the income taxes should be. So we're going to find out on that. On market share, especially on the international side, if AMC grew any market share, I suppose you could say downside risk if they lost some too, but especially year over year because of those promotions last year with some of the competitors, I've got a feeling this is more upside risk that maybe I could make higher assumptions based on attendance. I didn't forecast any growth at all, really, for the most part. I kind of just used the average of the last 4 quarters. Um, so we'll see. And then finally, I don't even have any forecast at all for revenue from the credit cards. Any of that is just gravy. I just have a feeling, I'm going to be honest, that I think it's probably so small in that quarter that it wasn't worth me even trying to figure out. But perhaps I'm wrong, and it's material and will bring the number up. All right, so let's kind of cover a few final details on the forecast. Cash, I'm actually believing that it's more than $100 million that cash will grow. I think I had 139, but I mean, that could be a wild range. I could be way under, I could be way over. So let's just call it something bigger than $100 million. Again, excluding any of those one time expenses and extra debt payments. But I really think AMC was cash flow positive this quarter. We're going to find out about that. And then finally, I mentioned popcorn and credit cards, so let's talk about that. I've got total earnings of just $1 million from popcorn. You can see I've got revenue of 2.9 and I had expenses of basically 1.9. I assumed a 35% margin, so I'm just fully telling you everything I did here. And all of this is complete napkin math. I mean, this is kind of made up numbers on this one. And then on the credit cards, I mentioned I have no forecast at all. So if you think that I'm too conservative or you think I'm too aggressive on this, I'd like to think on the popcorn, I hope actually that the number's a little bigger than this. Boy, we were selling out of Walmart fast, and you guys were just posting all over Twitter how much popcorn you were buying, and we bought a lot in our house too. So let's hope that perhaps that could be that sort of upside to my forecast. All right, bottom line, you know that I believe AMC had positive cash flows and positive net income for the first time since Q2 2019. And actually, interesting note, this is the bottom here, the all-time high in revenue for AMC was that same quarter. Q2 of 2019, AMC had just over 1.5 billion in revenue. At one point on one of my videos during the quarter, I had said I thought we would beat it. I'm not saying that anymore. There were a couple movies that underperformed my forecast, so I got a little excited during Q2 and thought we were going to set an all-time high on revenue. I don't know, perhaps if popcorn came in better, or like I said, if the food and beverage number came in better, then maybe we still got a shot. You can see my total forecast is basically 1.49 billion in revenue, so real close. So I suppose we got a shot at an all-time high in revenue, but I think we may have an even better shot at it in Q3 here. So let's just see, but just wanted you to start tracking that number, that AMC is starting to sniff being around its all-time high in revenues, and that is a huge freaking deal, guys. I tweeted about this, maybe it was this weekend. If you think about, they've got less properties, we've got less movies, and AMC is starting to reach pre-COVID levels of revenue on less properties and less movies. If you're at all kind of trained in business, then you know what that means is they've sort of they've basically improved what's called the gross to net by a lot. They basically reduced a lot of their expenses, so and sort of what's the word I'm looking for? Basically gotten some multipliers on their revenue. That's not the word I'm looking for, but maybe I'll chalk this one up to COVID brain again. They're just a lot more efficient than they were pre-COVID. If they're starting to get to the same revenue with less properties and less movies, it's a pretty big deal. And part of that is because we're spending so much on food and beverage. Part of that is sort of higher ticket sales. But part of it is just a better run business too. I believe AMC is actually healthier now. I've said in other videos and shown you the details, AMC's actually got lower expenses as well versus pre-COVID. And you know they've got lower debt than pre-COVID. That's proven. It's in the earnings. They even mentioned it in one of the calls. So there's a lot to like, especially as movies start to ramp up. Okay, some thoughts about, as we go into earnings, what happens if they do report these positive earnings. This is not at all a prediction. I cannot predict the stock market. If you even think like, I've said I can predict the box office really accurately. A little bit less accurate on earnings overall. And then like, if I could predict the stock market, I'd be a billionaire. And I am not a billionaire, so I cannot predict the stock market is what you should be hearing. But I'm just thinking out loud about what could possibly happen. A scenario possibly in play. So take this with a heavy grain of salt. If we have positive earnings that causes a price spike, And if AMC gets the green light for conversion, kind of somewhere in the middle of the price being a little higher, and if they're able to then sell those shares that we granted them in the vote, then AMC is going to be able to pay off debt or use funds for like other strategic purposes like mergers and acquisitions or some other big investment that we don't know about. That would be at a real nice price. Like if the stock is high when AMC is able to sell, and I think this is why the shorts are dragging out the court case so much, because they know at some point here they can't hold the floodgates back. The stock's going to spike a little, and if Adam's able to sell into that spike, and we wake up one morning and he says, "Yeah, I didn't have to sell very many shares, and by the way, we're debt free now," that's a real big deal. It's a lot more valuable and less dilutive. So there is a chance that that scenario is in play. Of course, it's awfully hard to predict what the stock market's going to do, and it's even harder probably to predict when Judge Zern is going to, I think, approve this settlement or even throw the case out. But we're going to find out. Either way, you can hear that I think there's some kind of chance of some kind of earnings spike. But let's talk about some things here. So what are the considerations around the stock itself as we go into next week? And you just heard me say there's absolutely no way I can predict anything about AMC. In fact, let's cover this middle bullet here first. Just where it says manipulation warning. Guys, we know AMC and APE are maybe the most manipulated tickers that even exist, maybe even of all time. It's a massive amount of manipulation that happens on these stocks. So anybody who tells you, X price on Tuesday or X price on Thursday, they're completely full of it. Nobody's ever been able to accurately predict the price of this. There was a time when I was able to chart it pretty well myself, but even the act of doing that over time made me realize how unpredictable this is. It's a volatile stock, which is why buy and hodl for a long-term thesis is really the safest way. If you're playing chase, more power to you, but that's not my game, and I'm not going to make price predictions. No dates, no prices on this channel. So I'm going to share some thoughts here, but just again, I cannot predict what's going to happen. It's so volatile. But I do think, I've put in quotes here at the first bullet, so possible surprises. I put in quotes because I've told you before, like my first video I think I ever made was a prediction basically that this quarter we were going to see positive earnings. That was a year ago I made that video, and here we are. So it's hard to call it a surprise for me, but basically the stock market community is not forecasting a positive earnings call for AMC. So they'll treat that, Wall Street will treat that like a surprise. So if that was to happen, then I suppose AMC and maybe even APE could see some kind of price spike, maybe see some FOMO, maybe even see a rebaselining of the market cap. So if Wall Street finally accepts that the fundamentals have improved, which they clearly have, I can prove that in the earnings information, then maybe there's a new market cap. Maybe we go up a bit. You hear the word maybe there. I'm not saying that's happening. And then again, what happens if there's also a approval of the conversion? Do we see APE spike a little bit? So there could be a lot of upside volatility these next few days. But also we know the shorts love to attack earnings. So I guess I'm saying protect your emotions. This is a play where, people want to sort of psychologically break you. So protect your emotions coming into next week. Here I am, sort of lots of rah-rah saying positive earnings, but just prepare yourself mentally for just about anything. And for me, I just don't get too high or too low. All right, disclosure at the bottom here. I own shares of both tickers, and I'm long calls on AMC. So I'm long on all of it, and I'm in, and I'm sort of set up for a lot of different dates of options, and mostly I'm heavy in shares. Like I said, I believe there's going to be some price spikes on earnings. We'll see. Could be wrong. Final thoughts. We're finally there. You don't have to keep listening to me and my COVID brain anymore. All right. Mentioned I'm here for the long run. Whatever happens next week, yes, I believe we could see an upside move. But if it doesn't happen, I'm not going to sit here crying. I'm just going to say, all right, I'm holding even longer. Let's see, eventually these guys are going to cover. Shorts have not covered yet. The fundamentals are so clearly improving. There's 3.8 million of us. We totally roll deep. All we got to do, keep seeing movies, use the AMC credit card, buy popcorn, spread positivity, because we're winning. Let's go.